Hello students, in my previous video I have explained how to compute income from business. Okay, I believe everybody has understood it. Now let's solve next question, which is a question paper sum, 2014 question paper, question number 16. In the current question bank, it is in page number 194. Let's solve this problem. Following is the profit and loss account of Mr. Sachin. Compute his gross total income. So let's see the credit side first. By gross profit, okay. By bad debts recovered, not allowed earlier. Not allowed earlier means disallowed. So this 2000 is not income from business, correct? It is income from business only, but it was disallowed earlier. So what you will do, you have already paid tax on 2000 in the previous year, in whichever year it was disallowed. So what you will do, this 2000 you will subtract it. Okay, so by rent from house property, this is a expense, this is a income which has to be treated separately, correct? So by rent from house property is income from house property, right? So again this also you will subtract it. Then by interest on FD, so by interest on FD means income from other source. Okay, again you will treat this separately, so you will subtract this. Next, by dividend from Indian company, so by dividend from Indian company is exempt, so 5000 you will subtract it. Then by winning from lottery, so winning from lottery is also, you have to treat it separately, correct? So this is income from other source. Now let's see the debit side. To salary and wage, okay. To rent and tax, okay, both are P&L item. Next, to advertisement, 8000 P&L item, not a problem. Next, to interest on capital. Now interest on capital is not a P&L item, correct? So interest on capital, you have to remove the effect. To remove the effect, what you will do? Remove the effect on net profit. What you will do? You will add it, correct? So 5000 you will add back. To depreciation, it is a P&L item, okay. To bad debts, 8000, fine, it is also P&L item. Next, to local tax let out property, okay. Now to local tax let out property, you have, it is expense which has to be treated separately because it is an expense of income from house property, correct? So local tax on let out property you will show while calculating income from house property. So this 10,000 you have to remove it. So to remove this 10,000 you have to add 10,000. Okay. To sales tax. Now sales tax, instead of sales tax it is GST. Okay. So same, the way you calculate GST, same way you have to treat sales tax. The way you treat GST, same way you have to treat sales tax. In the exam sales tax won't be given, instead of sales tax GST would be given. Okay, so in case of sales tax, if you had paid during the year, if the amount is paid during the year, then it is allowed. If the amount is not paid, then it is not allowed. Okay, so sales tax 6000, I believe that it is paid during the year. Okay, if it is not paid during the year, in the adjustment they will give that it is not paid. Okay, so for now 6000, fine, you don't have to do anything. Next, to income tax. To income tax, and next one is to wealth tax. Both are application of income. So income tax and wealth tax is scrapped, it is not there anymore. Still, okay, income tax and wealth tax both are application of income, so you will add back, it is not an expense. Okay, so 9000 and 10,000 you will add back because you want to remove the effect. Next, to addition to office building. Okay, addition to office building is a capital expenditure. Okay, so capital expenditure of 40,000 you will add back because you are supposed to show only revenue expenditure here, correct? So to addition to office building, it is a capital expenditure. So 40,000, you have to remove it. So to remove, you have to add back to profit and loss account. Next, to donation 15,000, this is personal. So again 15,000 you will add back. Now let's see the adjustments. Salary includes rupees 6,000 to Mr. Sachin. So salary includes 6,000 to Mr. Sachin means it is a drawing. Sachin is himself removing 6,000 from the account. So it is like a drawing, correct? It is not a salary. Owner is not paying salary to himself. Owner is, when owner is removing the money, that means it is a drawing. Okay, so 6,000 is not a expense. Okay, and it is shown in your salary and wages. So 6,000 you want to remove the effect, so you will add back to net profit. Advertisement include 3,000 spent on neon signboard. Now in your P&L account, to advertisement 8,000 is a revenue expenditure, but 3,000 spent on neon signboard is a capital expenditure, correct? Why it is a capital expenditure? Because neon signboard is not for 1 year, it is for many years. So it is a capital expense, right? So 3,000 capital expense will not, you cannot show it in P&L account. So what you will do, you will add back this 3,000. Next, depreciation actually allowable is 4,000. Okay, how much is depreciation in your P&L account? It is 6,000. That means 2,000 more they are showing, right? So this 2,000 you have to add back, correct? So 4,000 is allowed, 6,000 is shown, so 2,000 is disallowed. That means this 2,000 you have to remove it from your net profit. So to remove it from your net profit, you have to add 2,000, right? Next, sales tax of rupees 10,000 for previous year 10-11 was paid in this previous year but not included in the above profit and loss account. Okay, the sales tax, or I'll say GST, which was paid, it was not paid in the previous year. So this was not paid in the previous year means that year it was disallowed. This year it is paid. So this year it is allowed. So this 10,000 you can claim it this year. Okay, you have all. So what you will do, this 10,000 you will subtract from your net profit. Okay, this is an expense which is allowed this year. Okay, it is not included in your P&L account. So 10,000 is your expense. So 10,000 from your net profit you will remove it. So you will subtract 10,000. Okay, next one, actual amount of bad debts written off during the year is rupees 7,000. Okay, so bad debts is 8,000 and actual amount of bad debts written off during the year is 7,000. That means only 7,000 can be claimed during the year and 8,000 is claimed. That means 1,000 is disallowed. 1,000 is disallowed, so you have to remove this 1,000. So you have to add 1,000 to net profit. Okay. Next, the opening stock rupees 50,000, which was undervalued by 20% by Mr. Sachin. Okay. Now this, what you are supposed to do. Okay. Now this is my P&L account, or I'll say this is my trading account. Okay. This is my trading account. I write to opening stock. $50,000. Okay. So to opening stock, to purchases, buy sales, buy closing stock. Okay, I have written the amounts. Then you get your gross profit. In your P&L account, you write the same gross profit, whatever is here, you will write here. correct, by gross profit. You will write the same amount. You will write all indirect expenses, indirect income, if any. Then you will get to net profit. Okay. Now, if your opening stock is understated, okay. Now in the question they have said that opening stock is shown at the value 20% less than the amount, okay. That means 20% less means this 50,000 is 80%, correct. Let us calculate what is the 100%. If 50,000 is 80%, how much is the 100%, okay. So 50,000 divide by 80 into 100, or you can do, if 50,000 is 80%, how much is 100%? So when you do this, you get, I have already done, 50,000 divided by 80 into 100 is equal to 62,500, right? So it is 62,500. Okay. The value of opening stock is 62,500, but it is posted as 50,000. So that means your gross profit is not correct. When your gross profit is not correct, that means your net profit is also not correct. Correct? Right? So when opening stock it is like a expense now, right? It is on the debit side. So when your opening stock is understated by 12,500, the difference is 12,500, no? 62,500 minus 50,000. So that means your gross profit is overstated by 12,500 and your net profit is also overstated by 12,500. So what you will do? So you will subtract 12,500 from net profit, right? Because now when your opening stock is 50,000, your net profit is overstated by 12,500. Okay, you want to make it, you need exact net profit, right? So what you will do? You will subtract 12,500 from net profit. Correct? I believe everybody is able to understand what I am saying. I repeat again. Now opening stock is supposed to be 62,500, but Mr. Sachin has shown opening stock to be 50,000. Instead of 62,500, he has written 50,000. He is showing less. Okay, so opening stock is understated by 12,500. That means my gross profit is overstated by 12,500. If my gross profit is overstated by 12,500, that means my net profit is also overstated by 12,500. Correct? That means my net profit is not correct. So what I'll do? I will subtract 12,500 from my net profit. Got it? So the opening stock rupees 50,000, which was undervalued by 20% by Mr. Sachin. So what you will do? You will subtract the difference from the net profit. Okay? Let's start solving. Computation of income from business. Make 3 columns, particulars, amount. It's okay. Okay, so first, you know the format, correct? So net profit as per P&L account. So net profit as per P&L account is 1,32,000. Okay, add expenses disallowed, and expenses to be treated separately. Okay. Let's see the debit side. To salary and wages is a P&L item. To rent and taxes, P&L item. To advertisement, P&L item. To interest on capital. So interest on capital is not a P&L item, correct? So interest on capital. So interest on capital is 5,000. Next, to depreciation, P&L item. To bad debts, P&L item. To local tax on let out property. So this is a expense which should be treated separately, correct? So local tax on let out property, the amount is 10,000. Okay. Next, to sales tax 6,000. So we'll assume the sales tax is paid. Okay, so 6,000 is fine. To income tax 9,000. This is application of income. And to wealth tax 10,000. That is also application of income. So income tax and wealth tax. So which is 9,000 and 10,000. Okay. Okay. So next, to addition to office building, it is capital expenditure. To donation, that is personal. So addition to office building and donation. 40,000, 15,000. Okay. Now let's see adjustments. Salary includes 6,000 to Mr. Sachin. Right? So I'll write drawings. Drawings included in salary. $6,000. So that also you have to add back. Advertisement includes 3,000 spent on neon signboard. Neon signboard is a capital expenditure. So 3,000. Next, depreciation actually allowable is 4,000 and depreciation is shown 6,000. That means 2,000 is disallowed. So depreciation disallowed. $2,000. Next, sales tax of rupees 10,000 for previous year was paid in this previous year but not included in the above profit and loss account. So this 10,000 is allowed. So this 10,000 you will subtract, okay, from the profit, because 10,000 is the expense which you can claim it now. So this 10,000 you will subtract it. Okay. Now next, actual amount of bad debts written off during the year 7,000. How much is actual bad debts? Bad debts is 5,000. Actual bad debts is 7,000. Sorry, bad debts was 8,000. Actual bad debts 7,000. So this you will add back. Which is 1,000. Okay. Next, the opening stock of rupees 50,000 which was undervalued by 20%. So opening stock is undervalued. That means your profit is overvalued. So when profit is overvalued, you have to subtract the difference. Okay. Suppose in the question closing stock is undervalued is given. So in that case you will add it, because when closing stock is undervalued, your profit is also undervalued. So then you have to add it. Okay. But here opening stock is undervalued. So when opening stock is undervalued, your profit is overvalued. Okay. So when profit is overvalued, you have to subtract it. Okay. If opening stock is overvalued, then your profit is undervalued and then you have to add it. Okay. So I think only these many items are there to add. Okay. Now let's see what else to subtract. So subtract income to be treated separately. Income to be treated separately or exempted income. allowable business expense. Okay. Let's see the credit side. Bad debts recovered, not allowed earlier. This I have explained yesterday in my previous video. Correct? So, bad debts recovered, disallowed, disallowed earlier. Please pardon my spellings, which is 2000. Next, by rent from house property. Which is 24,000. Next, interest on FD. This is income from other source. Amount is 8,000. Dividend. $5,000. This is exempted income. Next, winning from lottery, income from other source. So winning from lottery, this is net amount, okay? Okay. So 14,000 is included in your P&L account. So 14,000 only you will subtract. And your adjustment number 4 and last adjustment. Sales tax. $10,000 and opening stock you're at undervaluation of opening stock. So undervaluation of opening stock. So just show the calculation. If 50,000 is 80, how much is 100? Or you can do how much is 20. That is the difference only. Okay. So 20 would be how much? So 20 would be 12,500. So it is undervalued by 20%. So 12,500. Okay. That's it. 5,000 plus 10,000 plus 9,000 plus 10,000 plus 40,000 plus 15,000 plus 6,000 plus 3,000 plus 2,000. How much it is? 15, 25, 35, 45, 55, 65, 70, 74. See if it comes to 1,01,000. Okay, just add 1,32,000. So it comes to 2,33,000. And subtract this. Okay, this comes to approximately 75,500. Subtract the 75,500. So my income from business comes to 1,57,500. Okay. Now let's calculate income from house property. Two columns, particulars amount. So rent received. So rent received is 24,000. Less local tax. Local tax paid was on let out property 10,000. So your NAV is 14,000 less standard deduction. which is 30%. It comes to 4,200, correct? So 9,800 is your income from house property. Okay, let's calculate income from other source. Two columns again, particulars amount. So interest on FD, how much is interest on FD? 8,000. And you can write dividend also here and write exempt. Okay, or write a note, dividend from Indian company is exempt. Right here, dividend exempt. Okay, next, winning from lottery, net is given. Okay, winning from lottery. So net amount is how much? 14,000. So in case of winning from lottery, TDS deducted is 30%, correct? So winning from lottery is 14,000. That means 14,000 divided by 70 into 100. Because in case of winning from lottery or winning from horse race, 30% TDS is deducted and 14,000 is the net amount. Okay, so if 14,000 is 70%, how much is 100%? You have to pay tax on 100%. So this comes to 20,000. So your actual lottery ticket was for 20,000. You have actually won 20,000, but they deduct 30% TDS and give 14,000 to you. Okay, but when you calculate income from other source, your actual income is 20,000 because 30% was TDS. All right. So your income from other source would be 28,000. Okay. Now, in your statement of income from business, okay, where you calculated, why you wrote only 14,000 here and not 20,000? Because in your P&L account it was 14,000, and your net profit which is shown in the question, 1,32,000, they have added 14,000, not 20,000, correct? So that's why you subtracted 14,000, because it is overstated by 14,000. Okay, now write computation of gross total income. Particulars amount. First is section 15, income from salary. Which is nil. Next, section 22, income from house property. So income from house property you have calculated 9,800. Then section 28, income from business. Income from business 1,57,500. Then section 45, capital gains. Nil. Then section 56, income from other source. So income from other sources 28,000. No? Total this is your gross total income. $1,57,500 plus 9,800 plus 28,000. Which is 1,95,300. Okay. So I believe everybody has understood how to solve these kind of questions. So I'll give you one homework question, which is question paper 2015, question number 15. Try to solve it. Okay, we will solve this question in the next class, but I want you all to try to solve it. Question number 15, question paper 2015. Okay, thank you very much, students.